Welcome back to Stock Explorers. Today we're going to do a deep dive into Innovate Corp, ticker symbol VAT. See if it's maybe something worth adding to your portfolio.
Mm.
They're an interesting mix of infrastructure and life sciences and even TV broadcasting. But the big news that's got everyone talking is their life sciences subsidiary MediBeacon and their recent FDA approval.
Yeah, that's a pretty big deal. MediBeacon just got the green light for their transdermal GFR system, TGFR for short. It basically measures kidney function. And the big thing is it's the first non-invasive system of its kind, so no more blood draws or urine samples.
Okay, you've got my attention. I mean, over 800 million people worldwide have chronic kidney disease,
Yeah.
CKD. So the market potential here is just massive. But before we get ahead of ourselves, can you explain how this TGFR system actually works?
Sure, so they use a fluorescent tracer called Lumitrace. It's injected, and then a sensor on the skin measures how quickly it's cleared from the body. And that clearance rate tells you how well the kidneys are functioning.
So a simple injection and a sensor could replace a whole bunch of tests. No wonder Innovate stock jumped over 86% on January 21st when the news came out. Do you think this kind of jump is sustainable, though?
Well, that's the question, isn't it? For any investor, I mean, the initial excitement is understandable, but the real test is whether this actually translates into widespread adoption. By hospitals and clinics, we need to look at things like cost insurance coverage and whether doctors will actually embrace this new technology.
Right, because even the best tech needs to be used to actually impact a company's bottom line. Speaking of bottom lines, how does this FDA approval fit into Innovate's overall financial picture?
Well, let's see. In Q3 of 2024, Innovate reported a net loss, which might make some investors nervous. They're also carrying a significant amount of debt.
Debt can be a red flag, but it's not always a deal breaker, right? It depends on how they're managing it and if they have a plan to reduce it. Have they addressed this at all?
Yeah, they have. They've been actively trying to control costs. You can see that in their reduced general and administrative expenses. Lower compensation costs seem to be a big factor there.
Okay, that's good. Shows they're being responsible and taking steps to improve their financial position. But debt aside, is there anything else in their financials that stands out to you, either positively or negatively?
One thing I noticed is that they completed the sale of their remaining stake in HMN International back in Q1 of 2023. This shows they're willing to make strategic divestitures, which could be a way to generate cash and potentially reduce their debt.
Interesting. So they're not afraid to make tough decisions
Mm.
and reshuffle their portfolio when needed. But let's not forget, Innovate isn't just about MediBeacon. They've got their fingers in a few other pies, right?
Exactly. In addition to life sciences, they have their infrastructure and spectrum segments. Their infrastructure business, DBM Global, saw a bit of a revenue dip in Q3 2024, down 37%.
Whoa, a 37% drop? Should we be worried?
Well, not necessarily. When you look closer, you see that despite that revenue decline, DBM Global maintains strong profit margins, 18.8% gross margin, and a 9% adjusted EBITDA margin.
Hold on. Can you break that down for listeners who might not be familiar with those terms? What do those margins tell us?
Basically, it means that even though they brought in less revenue, they were still able to control their costs and keep a good chunk of that revenue as profit. Shows they're efficient and can adapt to changes in the market.
Okay, so efficient and adaptable. That's good. But what about their future prospects? Is this a temporary dip, or is there reason to believe this decline will continue?
Well, their backlog suggests they're in a good position for future growth. They're reporting a backlog of $900 million and an adjusted backlog of $1.1 billion. So that means they have a lot of work already lined up, which will become future revenue.
That's reassuring. So even though revenue was down this quarter, they have a healthy pipeline of projects that should boost their numbers going forward. What about the types of projects they're taking on, though? Are those likely to be reliable sources of income?
Well, it's worth noting that DBM Global's industrial market is doing really well, with projects extending through 2025. That sector tends to be less vulnerable to economic swings than the commercial market, provides some stability.
So potentially a less volatile, more predictable income stream. That's something to keep in mind. But Innovate has another segment that I'm curious about. Spectrum. They're operating in over-the-air television, OTA. Seems a bit old school in the age of streaming. What's their play here?
It might seem like a step back in time, but HC2 Broadcasting, which runs Innovate's Spectrum segment, is actually riding a new wave of growth in OTA. They're launching new networks, expanding their coverage. They even launched a third free TV network called DeFi in Q3 of 2024.
Are they catering to a specific niche with these new networks, or are they trying to appeal to a broader audience?
Seems like you're going for a wider audience, especially cord cutters and those looking for free content. With the rising cost of streaming, OTA is becoming more attractive. For people who want content without breaking the bank,
So they're tapping into a market that's feeling subscription fatigue, offering a free alternative. Smart move. But is sticking to traditional OTA enough? Any indication they're embracing newer technologies in this space?
they're not just sticking with the old ways. HC2 is exploring opportunities related to ATSC 3.0. That's the new digital TV standard. And they're also looking into 5G broadcasting.
Okay, I need a little tech breakdown here.
Yeah.
What do those technologies mean for the future of OTA? And how could they benefit HC2?
Think of it as a major upgrade for over-the-air television. ATSC 3.0 means better picture quality, improved reception, and even interactive features. 5G broadcasting opens up even more possibilities for how they deliver content. HE2 is positioning itself to be at the forefront of these advancements. They could create new revenue streams and attract a larger audience.
So they're not just clinging to the past. They're looking to the future of television broadcasting. Sounds like they're strategically positioned for growth. But we can't ignore the elephant in the room. Their financials. We talked about their debt and cost-cutting measures, but let's dig a little deeper into their overall financial health. See if this is a company worth investing in.
You're right, we need to look at the whole picture. Innovate's financials are a bit of a mixed bag. On the one hand, they reported a net loss in Q3 2024, never a good sign. But on the other hand, their efforts to reduce costs are starting to show some results.
Okay, so a net loss, but signs of improvement. For someone like me who's trying to decide if Innovate is a good investment, what should I be paying attention to in their financials? What are the key metrics to watch?
We'll keep an eye on their debt levels and how they're managing that debt. They've made some moves to reduce it, like the sale of their HMN International stake, but it's still a significant factor. Also, watch their profitability across all three segments. Can they turn that net loss into a profit? If they can show consistent profitability, that would be a strong signal for investors.
Makes sense. So it's not just about the individual segments performing well, but also how they're contributing to the overall financial health of the company. Let's circle back to MediBeacon for a moment. We talked about the FDA approval and the market potential, but how does that translate into revenue for Innovate?
Well, that's where things get interesting. Remember that TGFR is a brand new technology. It's going to take time for it to be widely adopted. Hospitals and clinics need to purchase the systems, and insurance companies need to agree to cover the tests.
Right, there are always hurdles to overcome when introducing something new to healthcare. But assuming it does gain traction, what kind of revenue are we talking about?
It's hard to say for sure at this point. A lot depends on pricing, adoption rates, and competition. But considering how many people are affected by CKD, even capturing a small percentage of the market could mean a lot of revenue for Innovate.
Okay, so it's a wait-and-see situation, but the potential upside is big. But let's not forget, Innovate has other irons in the fire. There are two technology subsidiaries making waves in beauty and wellness. With their cryoaesthetics technology, what's the secret to their impressive growth?
R2 has been really strategic. They've targeted a specific niche in the market, skincare clinics and spas. And they've partnered with well-known brands like Epicurious and Is Clinical to offer customized treatment protocols. So this combination of innovative technology, targeted marketing, and brand partnerships has been a winner for them.
So it's not just about having a great product, it's about understanding your market, building the right partnerships, and offering something unique. Their 294% increase in unit sales worldwide says a lot about their strategy. But is the cryoaesthetics market sustainable? Is this just a fad, or is there long-term potential?
The beauty and wellness industry is always changing, but I think R2 is onto something bigger than a passing fad. Their focus on personalization with those customized treatment protocols really aligns with the growing demand for personalized skincare.
That makes sense. People are tired of one-size-fits-all approaches. They want something tailored to their needs. And let's be honest, who doesn't want to feel their best? But before we get carried away with glowing skin, let's bring it back to the numbers. How is R2's success impacting Innovate's bottom line?
R2 is definitely a bright spot in Innovate's portfolio. Their impressive sales growth is adding to the company's overall revenue. However, it's still a relatively small part of their business. The infrastructure segment with DBM Global is still their biggest revenue generator.
Right back to bridges and buildings. We talked about their recent revenue dip and their healthy backlog. But how does their performance compare to other companies in the infrastructure industry? Are they a leader or are they lagging behind?
DBM Global is well established in the industry, but it's a competitive market. Their focus on the industrial sector with its potentially more stable income could give them an edge. However, they need to keep managing their costs well and secure new projects to stay competitive.
Competition is fierce in almost every industry. Sounds like DBM Global needs to stay agile and innovative to stay ahead. But Innovate's Spectrum segment, focusing on OTA television, seems to be facing a different kind of competition. They're not just competing with other OTA broadcasters, they're also up against the dominance of streaming services. How are they navigating that?
HC2 Broadcasting is taking a multi-pronged approach. They're launching new networks to appeal to more people, expanding their coverage, and they're embracing new technologies like ATSC 3.0 and 5G broadcasting to make OTA better. They're also betting on the fact that people are tired of subscriptions and that there's a growing market for free content.
It's a bold strategy, going up against the streaming giants. But you're right, there are more and more people who are overwhelmed by all the streaming services and the cost. But is Innovate's bet on OTA a wise one? Could this be their saving grace, or is it a risky gamble?
It's a gamble for sure, but maybe a calculated one. I mean, everyone loves free stuff. But even if their Spectrum segment is successful, the success of Innovate really depends on them tying all these different pieces together. Can they really leverage MediBeacon and the growth of R2 and the stability of DBM Global to make a cohesive and profitable company? That's the big question.
Yeah, exactly. That's the challenge with any company that has a diverse portfolio. They have to make sure each segment is helping the whole company, financially and strategically. They can't have any weak links holding them back. So for someone like me who's thinking about investing in Innovate, what are the key takeaways? What should I be thinking about?
First, you got to consider your own investment goals and your risk tolerance. Innovate has high growth potential, but that comes with risk. They're in industries that are constantly changing with lots of moving parts. Their life sciences segment with the FDA approval for MediBeacon's TGFR is really exciting, but it's still early.
Right. No guarantees it'll be a huge success.
Exactly. And R2 Technologies is growing like crazy in the cryoaesthetics market. But that market can change quickly, too. And don't forget their infrastructure segment. That's their core business. But it faces its own challenges like competition and the ups and downs of the economy.
And then there's their Spectrum segment, betting on the return of over-the-air television. It's a bold move, but we'll see if it pays off. So lots of potential, lots of risk. What else should I be thinking about?
Look closely at their financials. We've talked about their debt, their profitability, their cost cutting. Those are all important. Go beyond the headlines and really dig into the numbers. What's their revenue growth like, their margins? How much debt are they carrying, and how are they planning to deal with it?
So do your homework. Don't just get caught up in the excitement of a new FDA approval or a fancy skincare technology. Look at the basics of the business. Anything else?
Don't forget about management. Are they making good decisions? Are they using their resources effectively? Do they have a clear plan for the future?
So it's about trusting the people in charge. They need to be able to guide the company through tough times and take advantage of opportunities. So after this deep dive into Innovate, it seems like the jury's still out. There's a lot to like, but there are definitely risks.
Yeah, that's investing. There are no guarantees. We've given you the information, the insights, the analysis. Now you decide. Do you believe in Innovate? Do you think they can overcome the challenges and reach their potential?
Is it a company worth taking a chance on? We always tell our listeners to do their own research, read those financial statements, and stay up to date on the industries Innovate is involved in.
Knowledge is power, especially when it comes to investing. Don't just rely on us. Come to your own conclusions.
And that brings us to the end of our deep dive into Innovate Corp. Hope this has been helpful as you make your way through the world of investing.
Until next time, happy